Hey everybody, this is Mitch Ferraro from F Street. I hope everyone's having a great day out there today. I'm the investor relations manager here at F Street, and I've got the opportunity today to talk with my good friend, my colleague, my partner in crime that I actually sit right next to in our office, Brian Gallagher. He's one of our development associates and also one of our investor relation associates. Super pumped to have this conversation today because we're actually going to be talking about something that is very, very active in the business right now. That's our industrial acquisitions and development that we're doing right now here at F Street. Super excited to talk about it because a lot of our investors, they love these deals right now. We want to give you a better understanding of why they love them, what we're currently doing, how it's working. And Brian, I just want to thank you for your time today. I know you're a busy guy. We're all busy here. It's like nonstop here at F Street. So thank you so much for your time today. Really, really appreciate it. Jumping right into the conversation, I know you get to deal a lot every day, day to day on the industrial side and what we're doing, acquiring these deals and developing new industrial buildings. Just give us an understanding, high level. Why are we so bullish on this stuff right now? Why is it that we can get these deals under contract and they can seem to raise very, very quickly? Give us just a better understanding of what's going on with our industrial stuff here at F Street.
Yeah, absolutely. Thanks for having me on, Mitch. Excited to be here on the pod. And in terms of the industrial deals and opportunities that we have been closing on and are continuing to chase right now, there's several reasons we like them. I think one of the best parts about them is the cash flow. In a lot of these opportunities, we're having distributions. Sometimes it's 2 weeks after close if we're closing mid-month, and then you have your first two distributions, call it within the first 45 days of the investment. Now, just because you're having, those first 2 months of, instant distributions doesn't mean it's necessarily a great opportunity, but, our opportunities, we have generally triple net leases in the assets, which means the tenant is going to be responsible for all the operating expenses, insurance, property taxes. So it really insulates us as the landlord from some of that, variability that you see on the operating expense side of things. And then the other thing we're looking for is, lease term. Now, a lot of times when we acquire these assets or we get them under contract, we have a shorter lease term, which actually brings the value of the asset down.
Yep.
Because these industrial buildings, really what they are is they're a box with a roof and a parking lot and a few dock doors. What differentiates box A from box B? It's the lease that's in place for, call it, the whole, if it's a single tenant building. And if the same exact lease in, two comparable locations has a 2-year term versus a 10-year term, the 10-year term building could be, valued 20% higher.
Sure.
So if we can buy a building with, a similar tenant and a shorter lease term and go in and negotiate a little bit and say, hey, do you guys have any maintenance you guys want done? Maybe a few months of free rent. And in exchange, can we, maybe get a longer lease term, or you have these 2 5-year extension options down the road? Are you willing to execute them now? And a lot of times, these are medium-sized businesses for the most part, and they don't want to relocate. They have employees that have been there. They've been like long-term occupants at these buildings. So we're able to, get a longer lease term through proactive negotiations. With all that being said, I think the industrial assets, it's really easy to, find these opportunities, underwrite them, understand the risk and the return profile, and then continue our education process from there. Whether that's talking with the current building ownership and the tenant, talking with brokers in the market to understand, hey, maybe these rents are under market a little bit, lease is coming due in 2 years, and we can bump up the rents a little bit. So the education process, all in all, we've found that, we can get ourselves educated on the risk and return profiles of these assets in a fairly efficient manner.
Yep.
So we can find the best opportunities for our investors.
Yeah, and I think that's a really good point. A couple of really good points in there. One is, instant cash flow right away. I think that's what a lot of our investors like about these, that you're getting that instant cash flow. You're in the deal. We close on the deal the following month. We're giving you a return on your cash on cash to be able to see money coming into that bank account every single month. You talk about education. I think that's another great thing that we do with our investors. Any investor that invests with us, not only are we underwriting these deals and understanding these deals very, very well, but then we portray that same message to our real estate investors that want to invest in these deals. I think we do a good job of hopping on the phone or a call to say, hey, this is what the deal looks like. Here's the profile of the deal. And if it makes sense, invest with us. If not, no big deal. And I think too, what's really nice is that because of the different types of verticals that we do at F Street here, whether it's new development, where typically on new development, you're not seeing that cash right away, but higher returns, as we start developing the deal and that building is cash flowing. We have the acquisition side where we're acquiring something, going to try to increase equity somewhere by extending a lease or making improvements to the building, being able to start cash flow right away, or the private debt fund, mostly geared towards single family homes and borrowing out money and again, instant cash flow. So I think what's really nice is that we do a good job of trying to give a lot of different perspectives of real estate to our investors that they can choose from, and we can educate them as well. And I know you've done a good job of going ahead and talking to our investors and letting them know like, hey, this is what deals look like. And you're boots on the ground, right? You're underwriting these things. You know what's going on with the deals. Speak to just kind of what some of the deals that we have done in the past, just in the recent since, December of 2024 all the way through now, April of 2025. Just give us a little profile of what we've done so far and what those deals have looked like.
Yeah, absolutely. You made a lot of good points there, Mitch. One of them that I want to touch on is the diversification. With F Street and with our development is a little bit more geographically bound. It's mostly in Wisconsin. We have done a project in Minnesota and a few other projects, outside of Milwaukee.
Mhm.
But for the most part, our ground up development has been in Wisconsin.
Yep.
And as you want, diversification of cash flow and asset type, you also want geographical diversification within your portfolio. So that's, with these industrial assets, we can acquire assets in Indiana, in Michigan, in Iowa. We have, really even further than that, we've looked at assets, on the East and West coasts. We're less geographically bound because, we don't need boots on the ground, call it every day, every week, the way we do in the development process.
Sure.
We still do our site visits and our, boots on the ground due diligence, but just because it's, a few hour flight away doesn't mean that we can't get there.
Right.
And we do get there. We do our property condition assessment and make sure that, we're checking all the boxes in our due diligence period. And generally we're doing that before we even bring these opportunities to our investors.
Yeah.
So to touch on, really the industrial acquisitions that we have been able to execute on. So it kind of started, we had acquired industrial assets, in the past at F Street. But in December, we closed on a building in Granger, Indiana, single tenant, triple net lease. It's a solid asset. It's in a great market for the specific business that the tenant is in.
Yep.
The tenant was in recreational vehicle axles. Very, specific, but it turns out Northwestern Indiana is the, capital of
Sure.
the RV industry throughout the US and really throughout the world.
Yep.
So they're right where they need to be for their business. And we had a really compelling business plan there of, hey, their rent's a little under market. They're a scaling company. They're not looking to move. They have this, great building that they've been able to grow into. They'd expanded in the building twice over the last, 3 years prior to our acquisition. So that building had a great mix of upfront cash flow and also a value add aspect with a potential rent increase in the near term. So that was, really an eye opener for us. Hey, there's opportunities like this everywhere.
Yep.
And then since then, we've acquired a 150,000 square foot warehouse in Maysville, Kentucky.
Yep.
That is leased to the 6th largest nonprofit in the United States. So great tenant. They essentially take excess charitable goods and redistribute them. So it's just a distribution warehouse. And again, for their specific business, being in Maysville, Kentucky, they're close to the eastern seaboard and the Midwest and the South, kind of central of the United States. They're close to a lot of the population of the US. So their business of distributing these excess charitable goods
Yep.
for them to be as close to, the largest amount of population
Yep.
is a great location for them. So we're very confident, in their long-term, viability. And the other one I'm going to touch on is the Wheeling deal that we just closed on, Wheeling, Illinois. So it's in the Chicagoland MSA.
Yep.
It is in Cook County, which is Chicago's county, and it's in a stable business park. You drive through there and you see all the buildings are occupied, not a lot of vacancy, also not a lot of new construction right there in terms of the industrial space.
Sure.
And we had a former owner occupant. He'd sold the business. And then once he sold the business, he held on to the real estate separately for about a year. And he realized, what, I don't really like being a landlord. When he owned the business and the real estate, they were kind of married together.
Yeah.
And when he sold the business, he realized that his passion wasn't being a landlord. Well, our passion is being a landlord and, growing our portfolio. So, we were able to get a deal done there and, acquire a great asset. So there's opportunities really everywhere around the United States, and we're just chasing all of them.
Yeah.
And finding the best ones for our investors, and then starting the education process with them, saying, hey, here's why we like this deal. Here's what compels us.
Yeah.
Ask any questions that you have, and we're happy to answer them or find the answers to those questions. And hopefully you're compelled by it for similar reasons, for the reasons that we are.
Yeah. Yeah. I think that's, unpacking that a lot and kind of going in, we have like this idea of type of industrial deal that we want to get into, but then there's these specifics of leases, where are they going in the future? What type of tenant is it? Another big thing that I think we want to touch on is that, we do new development industrial as well. You can't build versus what we're buying these buildings for, the already existing buildings. To build new industrial is expensive, but finding the right tenant that can fit that industrial building, a bigger company, a company that is maybe is generating a lot of revenue every single year. But these other types of buildings that are already existing, they're much more, I don't know if affordable is the right word, or they're much more attractive in that sense, because if we were to build that building that we're acquiring, and what we're getting it at is much cheaper than what it would be to build that actual building. So kind of just touch on, even though that we do the new development, and that is also a great opportunity, kind of just touch on like the differences of acquiring versus the development side.
Yeah, absolutely. And, if you just back up and look at it from an economic standpoint, supply and demand, just because there's new supply coming to an industrial market. So I'll just use like Milwaukee as an example. We've developed industrial in Milwaukee, and we also, own a few industrial assets in Milwaukee. Now, we might be able to build, and these are, kind of ballpark numbers, but we might be able to build a brand new 250,000 square foot warehouse for, call it $100 a square foot, all in development cost. Generally, the rents that we would, like to see to, make something like that pencil would be, $8 to $8.50 a square foot, maybe a little bit, $7.75 to $8.50 a square foot. Now, the buildings that we're acquiring, if we can acquire a building for, call it $50 a square foot, and the rent is $5 a square foot, the way those numbers are lining up is, really attractive to us.
Sure.
And when a new industrial building is getting built, call it, it might have a 28 to 30 foot clear height. A lot of these smaller and medium-sized businesses,
Right.
they don't have inventory that they need to stack 30 feet into the air the way, maybe a Fortune 500 or Fortune 100 company needs to.
Yep.
Think of like Amazon. That's a
Right.
very, tangible, everyone's probably seen them on the news, and you see their warehouses, and, they're really pushing the limits of, hey, we don't just need square footage, we need cubic footage.
Right.
So we need to go higher and higher.
Yep.
Well, that's not an issue that a lot of smaller and medium-sized businesses are facing.
Yep.
So even if they are able to afford it, they don't need to have a 30-foot clear height building
Right.
to operate their business efficiently.
Yep.
They can have a, call it 20 to 22-foot clear, smaller building that's going to fit their needs just as well for a cheaper price than the new Class A stock. So, even if there's a, industrial construction boom in a market, it's not necessarily adding the same type of product to the
Sure.
kind of the Class B industrial that
Yep.
we're targeting in a lot of these acquisitions.
Yeah.
So, it's a fairly insulated market, and that's one of the reasons that we really like it from a long-term perspective, because there's no new supply really coming online in the, call it C plus to Class B
Sure.
industrial.
Sure. Yeah. And that's if you are familiar like with the multifamily space as well, right? There's class A, new development, high amenity, higher rent type of development. There's class B, class C, where you're actually maybe acquiring 80 units, 60 units, maybe doing some improvements, building some equity. Very similar in the industrial space, very similar that way. I think that's also a good segue into, here at F Street, you guys are working hard every day, underwriting, penciling in to see what deals work. Tell us just a little bit about what you're seeing that we have coming in the pipeline and what we're trying to do through the end of the year.
Yeah, absolutely. So we set out a goal. So when we acquired the building in Granger, Indiana, in December, we kind of set out a goal. Hey, why can't we acquire 2 million square feet of industrial assets in 2025?
Yep.
So we are working every day to reach that goal. We're sending out, as Mitch mentioned, we're underwriting deals and talking to brokers and picking up the phone every day. We try to get an LOI out. We try to get 5 of them out every week. So
Yep.
it might not be one every day, but it might be 3 on Wednesday and 2 on Friday. We're trying to get these LOIs out and find these assets with, maybe it's a motivated seller or it's a compelling lease situation. There's a lot of opportunities out there. So, we see a lot. We look at, different online marketplaces and then our brokerage community that, we have, really been able to utilize in a lot of these because, we do a lot here at F Street. We're working with our investors. We're working on our multifamily developments. The industrial is one piece of that. Well, there's brokers out there that, all they do all day, every day is try to find these industrial opportunities. And yeah, you have to pay brokers, at closing, a fee,
Yeah.
but a lot of times that fee can be well worth it.
Yeah.
If they're doing their job to, the fullest of their ability.
Yep.
So, we have a lot more. It's, I don't think we have one launching this week, but, in May, I would assume that we will have, call it between 1 and 2 additional, industrial offerings for our investors to, really just keep diversifying their portfolios and, their cash flow stream for their, passive investments.
Yeah, absolutely. So, what Brian is saying, if you're a broker out there and you have an industrial deal, you may want to give him a call or shoot him an email. He may have some buyers, us, for that actual deal. So, well, Brian, I think this has been great today, giving our investors an idea of what we're doing on the industrial side, on the development acquisition side. Any investors that are out there that are possibly considering investing with us, our current active investors. One thing that I do want to say about these industrial deals, and I know Brian can attest to this, when we get them under contract and we offer them out to our investors, we are raising the capital very, very quickly. $2 to $3 million raises. Some of them are raising in less than 24 hours. Some of them are raising in less than a week. So if it is something that is of interest to you, we don't want to pressure people into getting into an investment, but just know that you may want to hop on a call with us, get an understanding of what the deal looks like, ask your questions, get comfortable with the investment. And if it does make sense, make the investment with us. So Brian, thank you so much for your time today, man. I really, really appreciate it. You're doing an awesome job. Love sitting next to you. We always have a good time
Every day.
every day.
Yeah, I love it,
sure.
Mitch. Thanks for having me on, and I look forward to coming on again.
Absolutely. So if anyone wants to contact us about the industrial stuff or anything on the investor relations side, you can reach me at mitch@fstreet.com. You can reach Brian at brian@fstreet.com. Very easy to get a hold of us. Let us know. We love to help you. We love to have you invest with us. And thank you for everyone for taking the time today.